Hey everyone, what's going on? It's Denise Donahue, the Mortgage Nerd, and today I wanted to talk to you guys about funds needed to buy a home. I like to separate these into three separate buckets, if you will. The first bucket is the down payment percentage. So if you're putting 5% down or 3.5% down, that's typically the bucket that you have to bring yourself. You can get a gift of funds from family or friends. You can borrow money from your 401k, but the down payment bucket cannot come from the seller or your realtor or your lender or things like that. The second bucket is what we call your closing costs. So with every mortgage loan, there's cost involved. You've got the title policy, appraisal, lender fees, and that second bucket along with the third bucket, which is called your escrow account. The escrow account is a little bit tougher to understand. The escrow account is like a savings account that's attached to your mortgage loan. And basically what happens is every single month when you make a mortgage payment, the property taxes and the homeowner's insurance and sometimes your PMI, when you make that payment to the lender takes that portion and they dump it into your escrow account every single month so that by the end of the year, they can write the check and pay for your taxes and insurance. But you have to set up a deposit for that, and it's usually a 3-month deposit. And so although it's not necessarily a cost, it's still tangible money that's required from you on closing day. So bucket 2 and bucket 3, your closing cost and your escrow deposit can actually be paid for by the seller as long as your real estate agent thinks that it's a property that they can negotiate for that. So for example, if bucket 2 and bucket 3 total, let's say $7,000 for the property you're looking for, I would suggest negotiating to have bucket 2 and bucket 3 covered so that all you have to do is bring the down payment. That would be option 1. If you don't have the funds for the down payment, there are down payment assistance programs. I just always say that's a last resort option because the interest rates on those are so much higher. So if you can get option 1, which is the seller to pay for it, you keep your monthly payment low and the interest rates low. So just wanted to give you that feedback. If you have any questions, you know how to find us. You can reach us at www.themortgagenerd.com. Take care.